This conference will now be recorded.
Hello guys, welcome to Kumar Consulting. So guys, in this session once again, I'm going to explain a pretty important question which was asked from one of your batchmates during the interview held in TCS. So it's very important question guys. Just have a look on the question and then I'll explain the answer as well. Now look at the question. The question is, what do you mean by foreign currency revaluation? How to configure it and how did it work. Now if you talk about question guys, in a single line interviewer has asked several questions here, like what do you mean by, if you talk about me, look at here, what do you mean by foreign currency revaluation? It could be a separate questions. How to configure it, again it's separate questions. How does it work, it right, this is also going to be a separate explanations. And again, from your explanations, interviewer is going to derive several other questions. So I'll tell you guys, this one single topic is going to be a reason of your selection. So we'll have a look one by one. Okay, first of all, we have to understand what is this foreign currency revaluation, or what is this revaluation process all about. Okay, and then we'll proceed further with the other questions. So now here, first of all, we need to understand the meaning of this foreign currency revaluation. How did it happen? So I'll just quote a pretty simple example here to make you people understand this foreign currency revaluation. Now let's suppose, I always take this example of Tata Motors. So once again, now Tata Motor is having certain, every company, whichever the companies are there, guys, I'll tell you generally, all companies, all companies are having almost, whichever the medium size and big organizations are there, they'll be having cross-border trade. Okay, because, and this is how the companies are going to be called as MNCs, right? So now here, cross-border trade, in the sense they'll be having customers from foreign countries, they'll be having vendors from foreign countries and all, right? So it means several transactions are taking in foreign currencies. Now we'll talk about several foreign currencies are there, guys. I'll take example of USD. I'll take example because this is a global currencies. Most of the trades, most of the payments are going to be, accepted in US currencies itself, right? So we'll take example of USD. Now Tata Motor is having certain foreign vendors. Let's suppose, okay, so the other vendors. Now say for example, we are having certain, so against these all vendors, we are having certain open items. It means we have procured a goods worth of 100, 200, 300, and again some different amount, let's suppose 250. Okay, so these all amounts are there in dollar. Okay, because the transaction has taken place into foreign currency, right? The vendors are going to send you the invoices in foreign currency itself. So even the transaction also will be posted in foreign currency itself, right? So now here, okay. So now what is, so if you talk about the payables, total payable right now for this foreign vendors, okay. So what is the total payable for foreign vendors, guys? It is total how much? So $850, right? Here, $850 is the total payable. Okay. Now, whenever this transaction has taken place, let's suppose whenever this transaction has taken place, so at that point of time, the currency, in the sense dollar value was what? So let's suppose it was 50 INR, Indian currency, right? This was the exchange rate. Now here 50 rupees means $1 equals to 50 rupees. Okay. Now here, so what will happen? Now we'll do one thing. So here we are going to convert this, whatever dollar value is there, that is going to be converted into our local currency. It means your company code currency. So 100 multiply 50. So how much it is? 5,000. This is going to be 10,000. In terms of rupees I'm talking about. This is going to be 15,000, right? And what about this 250? 250 multiply. Okay, now here 250 multiply how much? 50. So 12,500. Now, so it means what is the total payable here? That is, look at here, it is 42,500. This is the total payable. Okay. Now, say for example, this is the total payable on 2nd of March. Okay. So if it means if we are going to make payment on 2nd of March, then how much amount we are going to make payment, guys? We have to make payment. It means from your bank account, this much rupees, this much amount is going to be deducted, right? By your like let's suppose in whichever bank account you are having amount. It means we have to make payment of this much local currency, and then bank is going to convert into dollar, and that is going to be paid to the vendors, right? So now here, what is the total payable as of now? 42,500. Now let's suppose on 31st of March, the financial statement is going to be published. So before that, it need to be prepared. So whenever let's suppose financial statement, during the generation of financial statement, okay, so in financial statement, whatever your payables are there, that is also going to be, you have to specify. Whatever the receivables are there, that is also going to be specified, right? So now let's suppose the total payable, this for foreign vendors, it is 42,500 rupees. So if you specify here 42,500 rupees, that this is our total payable, right? So now what will happen, guys? There is one more thing. So on this 31st March, what is happening? The price of USD has gone up, and it become, let's suppose, this much. Okay, yes, it means the fluctuation has taken place, and foreign currency, it means USD value has gone up, and now 1 USD equals to how much Indian currency? It is 55 rupees, right? So, but as per, if you look at your books of account, it shows that our total payable is 42,500 rupees, right? But on 31st March, once we are going to publish our financial statement, you have to show your total payable, receivable, whatever the things are there. So now here the total payable for this foreign vendor payables I'm talking about, it is 42,500. But if you add this 42,500 in your what to say financial statement, is this a correct figure? Not at all. This is not at all a correct figure. Why? Because now whatever the total what to say payables are there, that is going to be changed, because on 31st March, look at here, the currency price is different, USD value is different. So what we have to do? It means we have to revaluate, right? Once again we have to check the value. So we have to revaluate. Now look at here, the total dollar is how much? Total how much payment we are going to make? 850, right? So now we'll do one thing. Now here, $850 multiply 55. So now how much it is? 46,750, right? So the total payable is 46,750. It means instead of 42,000, now how much we are going to pay, guys? We are going to make payment of 46,750, right? So once we have revaluated, this, the total payable, then what is happening here? How much we are supposed to pay? Now we are supposed to pay 46,750 rupees. Now you just do one thing, 46,750 rupees minus 42,500. So what is the difference? There is a difference of 4,050. It is a negative value. There is a difference of, it means if you are going to minus this from 42,000, this is the generally payable amount as per our books of account. But what is the actual payable, guys? The actual payable is 46,750. So from the total payable as per your books of account, from total payable, if you are going to minus this actual payable, then what is the difference? Difference is here 42,050 rupees. 42,000 here, 42,050 rupees, and that too it's a negative value. It means this is your loss, right? We are under loss of what? We are under loss of 4,250 rupees. Okay, now at the same time, say for example, just we'll go for a different scenario also. Now say for example on 31st of March, if this USD price, let's suppose it has dropped and it is only like 48 rupees, 48 INR. In that case, what will happen, guys? In that case, now here, in that case, 850 multiply 48. So look at here, 40,800, right? In that case, now total payable is still 42,500 itself, right? I'm just giving a different example. Okay, if the currency price is more, then we are under loss of 4,250 rupees. But if the USD value is coming down, isn't it? Both things are possible. If it is coming down, then what will happen, guys? Then how much we are going to pay? Then we have to pay 40,800 rupees only. 40,800 rupees we have to make payment, right? Now you just minus this. So minus what? 42,500, right? 42,500. So how much it is? 1,700. 1,700. But this 1,700 will be, this 1,700 is going to be in plus. Okay, this 1,700 will be in positive value, because if you're going to reduce this 40,800 is going to be reduced from which one? 42,500, right? So this will be a positive value, and it means this is our gain, right? But what is happening, guys? whichever this value we have calculated, whatever the value we have calculated, right? This value we have calculated to know the exact figure, in the sense to know the exact payable, or in terms of receivable also, the same example will be there, right? I've just quoted an example of payable. It could be the same things are going to be applicable even on receivable also. So to know the exact value of total payables or receivables, right? So now what is happening on 31st of March, our total payable is either this one if the currency value is more, right? In case of if it become 50 INR, if it is less, if it become 48 INR, then the total payable is this much, right? Either 46,750 or it could be 40,800. It could be any figure, guys. I have just quoted, I've taken one example in case of the price is like currency value has gone up, or in case the currency value has came down. Now, so if it is gone up, then what is happening? We are under loss. And if it is the value is currency value is coming down, then we are under gain, right? Because we have to make, let's suppose gain, why gain? Because we have to make payment of 40,800. If you make payment of 40,800 rupees, in that in 40,800 rupees itself, what is happening? Your bank is going to convert this 850, this 40,800 is going to be converted into $850, and this $850 are going to be paid by this $850. All these four vendors are going to be paid, right? So this is how it is happening. Now here, let's suppose, so we are under gain, and in case of currency value is like more, then we are under loss of this much. Now, so this on 31st, since we are generating our financial statement, right? So that is why we have calculated the actual payable, right? The actual payable. But whatever this gain or loss is there, right? Is it a real gain or is it a real loss? No, this is not a real gain, or this is not at all a real loss. Okay. On 31st, we have calculated that this is our total payable, right? If in case of more, if the currency value is more, and if in case of currency value is less, then this is the total payable. But the actual payment might be, let's suppose it's going to be made on 7th of April, or might be 10th or 12th or 15th of April. So this is, like actual payable is going to be made after 10 days, 15 days, or 20 days. So on 31st, simply we have just calculated a value on paper itself, and we are saying that this is our total payable, right? So there is a difference, certain differences are there. Those differences, if the differences are under negative, then that is your loss. But if the differences are under positive, then that is your gain. Now, so even though we are having gain or loss, but this is not a real gain or real loss. Why? Because actual payment is not going to be made on 31st, right? When the actual payment is going to be made, guys, the actual payment, let's suppose, is going to be made on 10th of April, right? So it means this is your, what is happening, guys? This is not the real gain, or this is not a real loss, right? This is unreal loss or unreal gain. So it is also called, so what is happening, guys? So this is called, it is called unrealized loss, or it is called unrealized gain. Okay, this is called unrealized gain, right? Though it is a gain, this is gain or loss, but this is unrealized. Unrealized, why it is unrealized, guys? Because as of 31st, as of 31st March, we are having either this much loss or this much gain, right? So this is unrealized. Why? Because We don't know what will happen in future. Might be on 7th of April there could be a different what to say currency value will be different, isn't it? So that is why we are saying that this is unrealized loss or unrealized gain. Now what will happen, say for example on 10th of on 10th of April, right? On 10th of April, what is happening? On 10th of April, uh, 1 USD equals to 1 USD equals to 52 INR. On 10th of April, let's suppose these all invoices become due. So we are going to make payment on 10th of April, right? So now here what is happening, guys? So on 10th of April, we are going to make payment, and on 10th of April, 1 USD equals to, what is the value of 1 US dollar, guys? Equals to 52 Indian currency, right? So in that case, what is happening? In that case, once again, how much payment we are going to make, guys? We have to make payment of $850 itself, right? $850 we are going to make payment. So now once again $850. Now here 850 multiply 52. So now we have to make, what is the actual payment which we are going to make, guys? Which we have to make, that is 44,200. The actual payment is going to be made 44,200. And what is the total payment which we are supposed to make as per the books of account? It is 42,500, right? So what is the differences, guys? If you reduce this 44,200 from this 42,500, then what is happening? Minus 42,500. So what is the difference, guys? 1,700. But this 1,700 is in negative symbol, right? Because this is smaller amount and this is a bigger amount, right? So it means it is our loss. This is our loss. But guys, this is your actual loss. Why it is actual loss? Because on 10th of April we are going to make payment. So your bank is saying that now, if, even though the moment you posted this transaction at that point of time different currency value was different, but right now the value of this US currency is gone up. The price of US currency gone up, right? So instead of 4,000, 42,500, now how much you have to make payment, guys? Now we have to make payment of 44,200. So how much extra we are paying, guys? We are paying 1,700 extra, and this is real. It means this much extra is going to be, we have to make payment from our pocket. So what is happening, guys? This is actual loss, because we are making here, we are making the actual payment here, right? At this point of time, what was happening, guys? This was just, we have calculated. It was only calculated on a paper. Why? To publish our financial statement and to show that the total, what to say, payable or receivable as of 31st of March. But here what is happening, guys? On 10th of April, we are going to make the actual payment. So if you make the actual payment, then we are under loss of 1,700, and this is your real loss or actual loss. So which is why it is called realized loss, right? This is your realized loss. Okay, at the time of payment, whatever the differences are taking place, okay, at the time of, so realized loss means what, guys? Or it could be realized gain also. Say for example, now once again I'll take, if it is 48 rupees, right? If 1 USD equals to 48 rupees, then what is happening? These things are coming, right? Same picture is coming. Okay, in case of 48 rupees. Okay, so what will happen here? Again, this is the, what to say, total payable as per your books of account. But what is the actual payable, guys? 40,800. And what is the total difference is 1,700, and that too positive value, because this actual payable is smaller than the whatever the actual payment which we are going to make is smaller than the payable which is there as per books of account. So now we are under gain of 1,700, right? So this is your benefit, right? And this is called realized benefit, right? Because at the time of making payment, we are going to make payment of 40,800 rupees only to the bank, and that is going to be converted into $850, and that is going to be that payment is going to be made to the vendors. So now here, so look at here, whichever the negative differences are there, that is our loss, and whichever the positive differences are there, that is our gain. But the differences which is taking place at the time of actual payment is our either realized loss or realized gain, right? But if the differences which is taking place at the time of, let's suppose, preparing the reports and all, if you're going to prepare any report, at that point of time, if you need to know what is our total payable and receivables, so what will happen? Then we have to go for revaluation, currency revaluation. We'll have to check as per, like, as of today, what is the price of this currency? What is the price of USD? Right? So we'll have to do this revaluations, and then whatever the differences are there, so those differences are going to be treated as either, that could be, if it is negative value, then that is going to be treated as unrealized loss, or if it is a positive value, then that is going to be, that is called unrealized gain.
This conference will now be recorded.
Now, so if you talk about foreign currency revaluation overall, like what do you mean by foreign currency revaluation? So look at here, guys. By means of this foreign currency revaluations, what is happening? We will come to know the actual payable or receivable on a particular point of time. And also, by means of this foreign currency revaluations, we will come to know the actual differences which is taking place. The differences which is taking place, why? The differences which is taking place due to the fluctuation in foreign, what to say, exchange rate, right? So I'll just do one thing. So what is the exact answer you have to give in a systematic way that I have noted down here. Now it is, and one more important thing, guys, this currency devaluation is a month in activity. Okay, so look at here what I have specified here. It's a month in activity which is carried out to know the actual payable or receivable. Just now, whatever I said, the same thing I have noted down here, guys. So it's a month-end activity which is carried out to know the actual payable or receivable in local currencies. Look at here, guys, whatever the amounts we are converting, we are going to convert into your reporting currencies, in your local currencies, right? Local currency means what? That is your company code currency. Okay. So now it's a month-end activity which is carried out to know the actual payable or receivable in local currency on a particular point of time, right? Hence, by means of currency revaluation process, what will happen, guys? We will come to know the actual differences which is taking place due to fluctuation in foreign exchange rate, right? Why these differences are taking place, guys? The differences are taking place due to the fluctuation in exchange rate only, right? Currency prices are going up and down, and this is the reason, which is why to know the exact figure of your total payable or receivables, right? What exactly we are doing, guys? We are going to revaluate. The currency revaluations are happening because prices will, it will be, there will be ups and downs in the prices, right? Now, even few more lines I have added here. These differences either can be positive or negative. Of course, that is already I have shown you guys. So these differences can be either positive or negative. Whatever the positive differences are there, that is going to be treated as gain, and vice versa. Vice versa means whatever the negative differences are there, that is going to be treated as your loss. And you can add one more line here. So whatever the gains are there, that can be either your realized or unrealized gain, and whatever the losses are there, that could be your realized or unrealized loss. Now look at here, from our answer itself, once again interviewer is going to derive two more questions. And what are those questions, guys? They can ask, what do you mean by realized gain or loss, or what do you mean by unrealized gain or loss? So that is also I have noted down in a very simplest this one. So look at here, what do you mean by realized gain or loss? So guys, realized gain or loss is the actual differences resulted from currency devaluation which has taken place during payment, right? Look at here, during the actual payment, whatever the differences are taking place, right? Whatever these differences, positive or negative, whatever the differences are there. So during actual payment, whichever the differences are there, those differences will be treated as our realized gain or loss, right? But what about the unrealized gain or loss, guys? Unrealized gain or loss is mere differences. Okay, look at here, it's just a mere differences only. It's just a calculation, right? Unrealized gain or loss is a mere differences resulted from currency revaluation from unpaid transactions, right? Whichever these transactions are there, this is unpaid transactions, and we don't know when it is going to be paid. It might be after 10 days, 15 days, right? So on a particular point of time, what is happening, we need to know the exact figure, and that is why we have revaluated the currency, what to say, prices and all, and whatever differences are there, that is going to be, so during that process, whichever the differences has taken place, that is called unrealized loss or unrealized gain, right? If it is negative differences, then it is unrealized loss, and if it is positive differences, then that is going to be treated as unrealized gain. Now, so look at here, we had questions like, what do you mean by foreign currency revaluation? So the answer I have given, from your answer, once again, two more questions has been derived. Now, the next question is how to configure it. So guys, I'll tell you generally what is happening. If you talk about configuration part, it means the interviewer is having something in their mind. The moment you started explaining configurations, means not like line by line each and everything you have to say, but 4 or 5 steps, let's suppose you guys are going to explain. But the moment you say these 4 and 5 steps, again from there also interviewer is going to derive certain questions, right? And let's suppose if I am conducting an interview, I can derive several questions, or any interviewer can derive several questions. Okay, there could be a question like, which kind of accounts are going to be assigned against KDB, or which kind of accounts are going to be assigned against KDF, or what is the difference between a KDB or KDF. Apart from this, like, what do you mean by valuation method, or what is the use of valuation method, right? Or generally, what is the use of this valuation area, right? Or what about this valuation method and what does it control? So likewise, several questions can be asked. These all are the questions which can be asked by interviewer. Still, I'm able to remember, guys, when I had given one interview, I think 1 or 1.5 year back. The same question was asked by interviewer, and interviewer asked like, do you know this foreign currency revaluation, what to say, configurations and all? I said, yes, I know. Then what was the questions? What kind of question they asked? They asked like, what do you mean by delta logic? What do you mean by rolling value? What do you mean by currency translations? Right? So I'll tell you guys from same topic. look at the kind of questions which is being asked by interviewer. So it depends. The level of questions depends upon the kind of experience which you guys are going to justify. I was justifying 10 years of experience. This is why these kind of questions were there, right? If you talk about delta logic and all, this is a country specific settings, right? But you guys are going to specify, you guys are going to justify less than 5 years of experience, right? So the level will not be this one in the sense whatever I asked, I asked just now. This KDB, KDF, these are the simple, what to say, things and very, what to say, common topics you can say. While configuration, these all things will come into picture and I'll explain in details what is the use of these all things. So what will happen guys, from your answer, several questions are going to be derived by interviewer. Okay, so we'll do one thing. Uh, in next session I'm going to explain whatever the things I just know, like during configurations, as I said, like several questions are going to be derived by interviewer, right? So if you cover those questions and all, then what will happen, how many people are going to give a reply or response? Out of 100, hardly 2% or 3% of the people will be able to respond, right? And again, how does it work? From there also certain questions will be there. So these all things will be explained guys. I have to record once again, one more session I have to record, or it could be two sessions also. Depends upon the kind of explanations which I'm going to give, because let's suppose this revaluation, during revaluation process, what is happening guys, certain differences are taking place. Now what about that, what about the treatment of those differences and all, right? It is a kind of whatever the gain or loss is taking place. Of course it's a kind of transactions, certain accounting entry is going to involve, certain GLs are going to be involved, right? So what should be the accounting entry? If there is whatever the unrealized gain is there, whatever the unrealized loss is there, whatever the realized gain is there, whatever the realized loss is there, isn't it? And apart from this, so there are several things, right? So these all things will be explained one by one. uh, so I think I'll have to record another, might be one session or two session. I guess it will take, that is going to be, it may take two sessions guys. So anyway, we'll do one thing. So here in this session what I have explained, I've explained about this foreign currency revaluation process theoretically, and in next session whatever things I have explained just now, that is going to be clarified in next sessions. If possible, we'll cover in one session itself. If not, then might be going to be completed in two sessions. So that's all in this session, guys, and that's all. The remaining things are going to be recorded in next sessions.